another topic which is very important and interesting. Why I say that is because increasingly CSR or corporate social responsibility funding is turning out to be the main source of funding for not for profits. Okay. And the government is also promoting this source of funding for purposes of social development projects. Slowly, this with the growth in the economy and with the profitability of corporates going up because of the growth, the total share of CSR funding in the total funding pie that is available for social development or social investment is actually going to go up year after year. So, if I can just say that currently our CSR expenditure or spend by corporates in this country is close to about 30,000 odd crores, which is expected in the next 5 years to go to about 45,000 crores. Now, you can imagine the amount of money that is available through CSR funding. And this is one source of funding which is being promoted because it is home grown funding in a certain sense, and therefore the government wants this kind of funding. Now, when we come to the CSR law, this law is applicable to corporates, and therefore you may have a question why this law we should know. Please remember that all compliances under the CSR law in a way indirectly depend upon compliances and understanding of the provisions by us because we are implementing partners for these funding, for this kind of funding, CSR funding. And therefore, it is very important to know the various important or key provisions in the CSR law. How do we understand them and how do we comply with them? Because if we do not comply with them properly and in time, okay, both not only properly, not in terms of what is required as per compliance, but also in terms of time, there will always be a conflict with the company or the corporate who has given us CSR funding. So it is important to understand what are the compliance requirements around CSR so that we understand and do not get into a conflict with the corporates. Otherwise, sometimes the corporates will say, we want this within this timeline. Now, we think as not for profits, well, it is not possible. But one needs to understand, and especially the finance people also need to understand that there are provisions in law which require the companies to report within that time frame, and therefore they are asking us, you know why? Because they are getting the work done through us as implementing partners. So not for profits or NGOs or agencies that implement CSR funds are called implementing partners or IPs in the language of CSR. Now, the CSR law does not talk of the word grant or donation. It just talks of CSR fund or CSR spend. Okay. So let's begin with the session. I've just given you a broad hint. It should ensure that, and we have about 30 to 35 slides in this presentation. Each slide has key provisions in the law which we should know. Okay. And at times the corporates might not know, but we should know and try to explain to them what it means in terms of our side of the story. Okay. So the layout of the session today is somewhat like this. One, all corporate social responsibility law in this country is around section 135 of the Companies Act. Before that, let me just say that until 2013, when the Companies Act of 1956 was repealed and the Companies Act of 2013 was enacted, okay, there was no compulsion as far as CSR is concerned. So CSR was voluntary, okay, up to 2013. However, India decided that we will have CSR as mandatory within the purview of law. And therefore, this section 135 was introduced or included in the new Companies Act of 2013 then. So 135 is very important. Just remember 135. We will do various provisions of 135, but I'm not going to give you any subsections or anything, but the provisions are very important to understand. And appended to the section 135 is what is called as Schedule 7. Now, the Schedule 7 is nothing but the activities that can be undertaken under CSR. So when we were seeing, so what is it that is possible under various laws is defined on those laws. Okay, like as we saw in what is charitable, what does charitable mean? We have seen what charitable means in section 215 of the Indian Income Tax Act. Similarly, what charitable or what purpose means in FCRA is different. What purpose means in GST is different. What purpose means here as far as CSR spending is concerned is contained in Schedule 7 appended to Section 135 of the Companies Act. Now, these two portions of law in the Companies Act 2013 are what comprises the CSR law in addition to the company's CSR policy rules, okay, which were enacted in 2014 and amended subsequently several times. And the last major amendment was made in 2021. Now, that's one we are going to see. The second one is, of course, the law rules that I have already mentioned. Then I will talk to you about the advisory for the utilization certificate, which is very important from the ICAI. The fourth is we need to understand the concept of sustainability, ESG, and CSR. Okay. While again, ESG compliances are with corporates, but how does our work fit into ESG? How does our work fit into CSR? And how does our work fit into sustainability? You know, at the end of the day, we are the ones who are doing the work on ground, and therefore the sustainability is something that we are ensuring through these corporates, but because they are giving us money. So unless we understand what is the overlap between sustainability, ESG, and CSR, and what are the provisions around ESG broadly, okay, we don't need to comply. But we need to understand what the corporates need to comply so that we know what we need to provide to them so that they can comply. Otherwise, there will always be a situation of trouble or conflict. The last thing is some resources for new business. I must add quickly that this session is not on raising CSR fund. This session is on understanding the legal aspects relating to CSR and the nuances related to that. Okay, so that's how it is. So it's not a new business presentation, but a presentation on how to understand the law around new business under CSR. That's how it is. So let's begin the session as per our layout. Uh, this is the section 135, that is what I have before you. Section 135 is corporate social responsibility. What is the responsibility of the corporate to society? Because the corporate is drawing resources, various types of resources from the society and also giving back products and services to the society. What is the responsibility that they have? Okay. So the section 135 says that any company, okay, which is incorporated under the Indian Companies Act of 2013 or the earlier acts, but it is incorporated under the Companies Act, and who has one of the three means not all three are required, one only out of the three triggers. If there are, then you will be covered under corporate social responsibility. The liability for corporate social responsibility. One is turnover more than 1,000 crores, net worth more than 500 crores, 500 or more, turnover 1,000 crores or more, and net profit 5 crores or more. Generally, companies will have 5 crores or more net profit is the first trigger at which they will be included in the corporate social responsibility, under CSR. Now, in my understanding, there are close to about 30,000 companies in this country. We don't have exact data after 22-23 on the MCA CSR portal, The MCA CSR portal for 21, 22, 23 actually said there are about 28,000 companies, listed, unlisted, but under the Companies Act, which were obligated for CSR work. Okay. Now, so either of these three conditions, how do you find that out? That you can find out from the annual financial statements of these companies. So if they have one of the three, then they are under CSR, under section 135. So you don't have to run around to find out whether they are under CSR or not. They will have their website and you can see their audited financial statements and see their three figures. One, the turnover or their sales. The second is net worth. Net worth is equal to capital plus reserves, okay, on the liability side. And the third one is, of course, net profits, which you can always see on the profit and loss statement of that financial statement. Generally, most companies will have their audited financials, placed on their website. Now, if one of these three conditions are attracted, then they are under CSR. What does that company have to do then? So there are a couple of things that they need to do. One, they will need to constitute a CSR committee. Now, the CSR committee is actually the nodal committee. This is a board committee. So from the board of directors, some of the members of the board will become members and chair of the CSR committee. So the one thing that we now know is that if a company is under CSR, then it will always also be required, except some situations which we will see, to have a CSR committee. So for us as NGOs, what is the nodal agency for purposes of CSR? The CSR committee in that organization and the CSR division if there is a separate division. Now, what does the CSR committee do? The CSR committee does three things. One, so you can see the CSR committee of a company also on its website. Third, next. So the other thing that the CSR committee does, primarily the first thing that the committee does is to prepare a CSR policy and send it to the board for its approval. So the CSR policy is now a much broader, robust document compared to earlier times, especially after the 2021 rules, where they will have to say what are the activities that are contained in Schedule 7. As I said, Schedule 7 contains the activities which can be taken up under CSR. What are the activities? They can't take up all the activities. So they will decide which the CSR committee will decide which of those activities they will like to follow or they will like to pursue under the Schedule 7. And that will be included in the CSR policy. Now, what it does, this CSR policy is also available in public domain. What it does, it helps you to know whether whatever activity or objects you have, are those objects in line, are the activities in their CSR policy matching with the objects and activities of your organization. If they are matching, then you have a possibility of getting funds from that particular corporate. Otherwise, it will be better not to tap that corporate because that corporate is not promoting the object for which you are set up or your activities are there. Because if you're doing some new activity, it might not be possible for you to get funding. So the CSR policy also says how will those money be, spent, what will be the mechanism for implementation. So it's a very detailed kind of a document which is available on website. Now, the biggest thing that you can notice is whether the company will, what is the activities that the company will pursue through the CSR spend. That is one great, information that is available. Second is, will that CSR money be spent by the company or through NGOs like us? That is also specified. Okay. And there are many other things that are specified in terms of annual action plan and things like that. But these are some things. Again, you don't have to run around. You have to look at the website of that corporate to see what does that CSR policy say. Next thing, once the CSR policy is set up, that is the framework, then the CSR committee has to make an annual action plan and say how much is the amount of expenditure that will be incurred on various activities that are included in the CSR policy. That is the annual action plan. And how much money they can spend is something that we will see in the next slide. So the CSR committee is the board committee, which is in a way a decision making authority, but ratified by the board of directors finally. The board of directors takes the final responsibility for CSR. But the CSR committee will recommend again the action plan and say how much money will be spent. The next thing is that the CSR committee is also responsible for monitoring and evaluating the implementation of the various programs. So you can see that the CSR committee is the nodal agency for CSR activities in a company. Now going to the next provision. So once the CSR committee has recommended the CSR policy, the board will approve the CSR policy. And that is the responsibility of the board. The board is also taking the responsibility of having to place the CSR committee and the CSR policy on its website. Okay. The board is also responsible for seeing that the activities as per the CSR policy are being undertaken. So final responsibility is with the board, and the board will have to ensure one, and this is the place where we will come to know how much money can be spent by a company on CSR activity in a financial year. Okay, this also is possible because you would have the audited financials and you can see how much is the amount of money that this company has to spend. So you have the 3 years, previous year's balance sheet, 21, 22, 22, 23, and 23, 24. They are available in public. And then you can calculate roughly at least how much is the amount of money that this company will spend in this current financial year, for instance, in 24-25 or 25-26. So what is the mandatory requirement for CSR uh, allocation in a year is what we are now trying to understand. Please remember that in a financial year, in any financial year, if those three triggers that we saw, CSR is applicable. It's not for 2 years or 3 years, any year. Okay. Now, second, so what is the amount of allocation that needs to be done towards CSR? It is 2% of the average net profit. The net profit calculation is as per a particular section. Okay, some adjustments are to be done from the net profit which is shown on the P&L account. Some adjustment, I'm not going to share that. But what I'm saying is broadly the net profit figure in the audited financial statement for the last 3 years, you will have to average the last 3 years profit, 3 years profit, total it up, divide by 3. If there's a loss in that in any particular year, that will be reduced from the overall total number. And whatever is the average net profit of that year of the past 3 years will become the average net profit on which 2% will have to be applied, and that will be the amount of CSR allocation for the year for that particular company to spend. So suppose if we're to just say 100 was the profit in the last 3 years, then 300 divided by 3 is 100, and 2% of 100 is the obligation of the company as far as CSR expenditure is concerned. Okay, that is how the calculation has to be made. If there are losses in all 3 years, then the 2% of all losses means no allocation. Although the company might have one of the three triggers, still continues to have. But if it's a loss, then there are no allocations, as you can understand. Okay. Now, corporate social responsibility is out of, so there's a big debate that keeps happening uh, is there the Ministry of Corporate Affairs, which is the nodal ministry for CSR, has clarified that CSR is below the line, which means it's after profits, it's from profits, it's not a business expenditure. However, a lot of court rulings have still given the benefit of 80G to corporates saying that, well, they can claim ATG for the CSR spend. So there is a discrepancy here between what the ministry thinks uh, about CSR as not being a business expenditure, because it is calculated after profit or below the line, but still there are court cases which have considered this as business expenditure and allowed corporates to claim ATG benefit. Okay, so I just want to mention that. Now, that is the amount of money that has to be allocated for purposes of CSR. There are there is one more thing. So the law says that you can reserve or you can allocate more money for the local area. The local area means the area where you are operating. Now, where will you find whether there is a provision for local area preference? I call it LAP. The LAP will again be in CSR policy. So if you have a company close to your operations and the CSR policy available on their website says 75% of our allocations will be for local area preference, then and the object is also matching the activity that you are doing, then that is a fit corporate for you to go and get money for CSR. So you have to be intelligent in terms of understanding these documents rather than running around, and be able to see which corporate will probably be your fit in terms of being able to give you money. Now, before the 2000, so in 2021, there was a major shift in terms of CSR, major shift. Okay. And we will see what that shift is, what we call as paradigm shift. That was a very strategic major shift that has made CSR all the more interesting. Before 2021, the provision in law was that if you are not able to spend the 2% allocation that is your responsibility, then if you are not able to spend it, it can lapse, provided the board will give reason for not being able to spend. Now, the ministry saw that there was, did an analysis and found that while 2% of the net profit, there were large number of companies and the amount of 2% was a very big amount. However, the actual spend was much less than their obligation to spend, because boards and companies who could not spend would just give an explanation why they could not spend. This particular route or this particular option was closed in 2021, which means that companies now need to mandatorily spend the 2%. They cannot say we spent or we could not spend and give an explanation and get away with that 2% and keep that 2%. That particular period has gone. Okay, so this is the biggest paradigm shift that has happened that we should be aware of. Okay, because that has changed the game as far as CSR is concerned. Now, there is no possibility of spend or explain. Spend or explain category is gone. It is all mandatory. Now, these are some of the provisions relating to Section 135 that I wanted to say. Now, if you will see, all this information is slowly, and the bigger companies, it's already available in public domain. Smaller companies are, moving up the curve and trying to put all this information in on their website. Now, coming to Schedule 7, this Schedule 7 is lists the activities, there are about 12, 13 of them, lists the activities that can be done through CSR. So you cannot do any activity which does not fall, which is CSR, but which does not fall under Schedule 7. And what activity a company will pursue in through its CSR funding is from this Schedule 7 and made part of the CSR policy. Okay, that's how you have to understand. So I have tried in the next, in the next three slides, I have captured what is included in these policies. And mind you, everything which is for the sustainable in terms of the Sustainable Development Goals is concerned, SDGs is concerned, the 2030 target, most of the activities are included there. Now, when we'll do securities law for not-for-profits, which means that can we raise money through securities, issue of securities, just like for-profit, we will find another set of activities which can be, for which monies can be raised through the social stock exchange. So every law talks of what activities, on what activities the money can be spent, and so also the CSR law. Now you can see it talks about poverty, it talks about water. But two, three things I want to say. One, it covers mostly everything which is on our various sustainable development goals. Two, it says that you can contribute to four of the funds, the Swachh Bharat Kosh, the Clean Ganga Fund, the Prime Minister Cares, and the Prime Minister Relief Fund, and that are all considered as eligible funds for contribution, not any other funds. So the government may designate more funds in terms of, funds where money, if it is given to for CSR, money is given will be considered as CSR. Please remember, these funds are not funds where a lot of money is going. Companies want to spend the CSR money through their own or through the implementing partners like us. And we need to understand the law so that more and more funds come to implementing partners and the companies do not set up their own foundations to implement. Otherwise, where will we get the money for our bread and butter? So understanding this law is very, very important to that extent. So gender equity, health, okay, ecology, environment, okay, heritage. Now, if you see heritage, you'll see environment. They are also part of Section 215. They are also part of the Sustainable Development. Women, gender. So then they are talking of the benefit to the armed forces. They are talking about, research and development. They are talking of Prime Minister's National Relief Fund or the or CARES Fund, okay, the one which was set up during COVID, on sports, Paralympic sports, on various scientific research work through various agencies like ICMR or ICAR or CSIR, or basically if you were to do scientific research through these government agencies and fund them through for this particular research work, again that is also there. Then rural development projects are also included. So the word rural development project has not been defined as such, but all aspects of rural development where projects are, supported can be part of CSR. Again, the definition is what the specific word is mentioned here. The ministry says we will have to interpret it slightly liberally, okay, to take advantage of the the various connotations of these words. The slum area development projects, as maybe I declared by the central and state governments. Disaster relief, okay, which is, so the last two, which is 11 and 12, were included in 2019. This 2019, and the disaster relief, rehabilitation and reconstruction was extensively used under COVID. Okay, so these are some of the activities that are considered. Now you will have to see what is your object for which you were set up. Is it part of these clauses or activities that are permitted under CSR? Look for those corporates which are promoting those activities as part of their CSR policy. Now that is the message that I want to give for you to understand how best to tap CSR funds. Now coming to the paradigm shift that happened, what changed the landscape for CSR was the fact that from spend or explain, this provision was deleted and it was said you will have to spend. You cannot say I can explain for not spending. Now, in 2021, there were two kinds of projects that were defined in terms of implementing projects or what can be considered as projects. Again, the CSR law talks about projects or programs, but the word project or program is not, not explained or not detailed or not defined. So we will have to see what a project is and what a program is. In social development sphere, project is more time bound, program is more long term, the impact is more at the program level, project is shorter objectives or outcomes, but there is no specific definition. So one thing is very clear, that we will have to have a project or a program. The money for CSR cannot be given just like that. So can the money be given for corpus? No, because corpus is not for a project or program. So I hear a lot of NGOs saying, let us apply for corpus to this corporate for under their CSR. Please remember, corpus fund is any fund provided as corpus will not be considered as CSR, because it is not on spend basis and it is not for a project. One another thing I want to tell you is, all CSR fund is on spend basis, just like FCRA. It has to be reported on utilization basis. Only then it it can be reported. Why? Because the 2% has to be spent. So it is on spent basis. It is on spent basis. That please understand. So if you have money which is unspent in your bank account but given by a corporate at the end of the financial year, is it utilization? The answer is no, which you must know. Then you will start saying, will the money came to us, we will spend the money, doesn't matter. But when the corporate will ask, was the money actually spent? You will say no. Then that is not considered as spent. Now coming back to what are the projects that can be supported? Now, the definition are two. One is what is called as non-ongoing project, okay, uh, which is what I call as a standalone project or one-time project. Now, a one-time project can be buying some machine, buying some equipment, construction. If that is the case, then that is a not is a standalone one-time project that the corporates can give. Can they give for construction? Yes, they can give. For anything they can give, which is in line with Schedule 7. Okay. So if you want to promote sport and then you will have to want to construct something as a small stadium or a small kind of a place for preparation, then again that is possible. Okay. That money that you will get will be for a one-time activity. So construction of a labor room, construction of a school building or a school classroom, all that is one time. Now, if the money for that particular one-time standalone project is not spent in that financial year, then that money has to be deposited within a period of 6 months of expiry of the financial year in one of the, uh, 4 funds that we saw: the Swachh Bharat Kosh, the Clean Ganga Fund, the PM Cares, and the PM National Relief Fund. So if the money for which was for a one-time activity, if it is not spent, then by 30th September of the next year, that money has to be deposited in a Schedule 7 fund. Okay. However, the government has provided for repurposing of that or for changing the nature from standalone one-time to ongoing project also. However, if that is not done, then for such ongoing one-time project, the money unspent will have to be deposited in the Schedule 7 funds. The second is what is called as an ongoing project. And the ongoing project is the ongoing projects that we normally do as NGOs, because our work is for community empowerment, for behavior change. That takes a lot of time. It is an ongoing process. So such projects are called ongoing projects. They keep on going. Okay. Now, what is an ongoing project? So if you were to change behavior in terms of health, in terms of non-communicable disease, in terms of education, that will take a lot of time. And those projects are ongoing projects. Now, what is the total period for which an ongoing project can be made is what we need to understand as NGOs. I see projects being made for a period of 5 years for CSR funding from corporates, because we do not know what is the total time limit for preparing an ongoing project. Please remember, the ongoing project has a total limitation of 4 years. You cannot make a proposal for more than 4 years under CSR as an ongoing project. You cannot make a corpus funding request under CSR. So what does this 4 years mean? Suppose we are in 2025-26 on May 9th. Then if the proposal was submitted now and your money comes in, say, February 2026, then 2025-26 February, you get the contract. When the contract is issued, that is year one. And the year will come to a close on March 26. Plus 3 years. So 27, 28, and 29. 31st March 2029. Beyond that, you cannot submit a proposal for an ongoing project. Now, this is something that you need to know. Otherwise, you will be making a project for maybe 5 years, 7 years. You never know. But unless you know that what is the total time period for which a project can be done, we will not do the right thing. So please remember that a CSR project cannot be for a more period of more than 4 years, including the year in which it is sanctioned or the contract has been given. If the contract is given also on 30th of March of that year will be considered as year one, and you will have only 3 more years to complete. So your projects have also to be designed that way, understanding that the total period is 4 years. Now comes the important part. Now you have an ongoing project in 25-26, like this year you have a project and you submitted a proposal, and on 30th June you got a sanction, and in July you got the money. Now you got your project was for 1 crore for 25-26 and you got the money. But by 31st of March 2026, out of this 1 crore, you were able to spend 70 lakhs and 30 lakhs are lying in your bank account. What is the amount of spend? 70 lakhs only, not 100 lakhs. 70 lakhs. Now 70 lakhs has to be reported to the corporate as the expenditure. Now, what happens to the 30 lakhs? The 30 lakhs is the amount of unutilized CSR amount. Unutilized CSR amount. And what needs to be done by the company with that 30 lakhs? And we must also understand that is that 30 lakhs has to be deposited in a bank account. You'll have to open a bank account, and which is called the unutilized CSR account for 24-25, for instance 25-26, whichever year, and that 30 lakhs has to be deposited in that bank account. So normally if there are small amounts that are left, the company may not ask you to refund the unutilized amount as on 31st March. But if there are big amounts, then the company may say, well, please return this, we will give it to you in the next year. Both situations can happen. However, the company has to mandatorily deposit the unutilized CSR amount of that year by 30th April of the following year. So 25-26, you didn't spend 30 lakhs. 30th April 2026, that is within 30 days, that 30 lakhs has to be deposited in the unutilized CSR account, whether the money the corporate takes from you or deposits from its own resources. Now, 30 days is no time. So how does the company know how much to deposit by 30th April? So the corporate will get back to you and say by 4th, 3rd of April, please let us know what is the expenditure. Now you don't know that the 30th April is a deadline, which means they just have 30 days to finalize how much amount to deposit. But we don't know that. So they will ask for these details by 4th, 5th, or they'll say latest by 7th, please give it to us. Okay, then we will start cribbing and saying, why are they asking about 7th? My books don't close before 15th. And my expenditure from the field will come by 10th. My program folks will get all the expenditure. Then the corporate will start, you know, conflicting with you, because if you get the information by 10th and you feed it by the 15th, how will the corporate know how much to deposit by 30th April? Now, does that provision not be known to you? Yes, it has to be known to you so that you can provide the unutilized spend amount, which means you have utilized the rest, and therefore the utilized amount will be the basis for finalizing the unutilized amount, which means you have to incorporate all expenditures in your books to be able to give that unutilized CSR amount somewhere by 3rd or 4th, which means you should be able to get all your data by 1st or 2nd at the place where the accounting is happening. Now, you need to work backwards to see that you are able to meet this deadline, not to go back to the corporate and say, we will be able to provide this information only by 20th. Then there is a problem with the corporate. So sometimes corporates might not even say this to you because they might come to you at the last moment. What I'm trying to explain is that you must know that within 30 days, the unutilized CSR amount has to be deposited in the unutilized CSR account by the corporate. Now that means that your MIS, your expenditure, your tally needs to be set up for the month of March 2025 or 26 accordingly, so that in the first week of April, you are able to tell them how much is the unutilized amount. Now, I have already told you both situations can occur. If there is a very small unutilized amount, then the corporate may not ask you for a refund, but they will still deposit it in the unutilized CSR account. However, if the unutilized amount is a big amount, then in that case, they will ask you for a refund and give that money to you next year. These days, corporates are not giving more money in last quarter also, because they are saying we will, even if we give you money in the last quarter, that is January, February, March, please give us a foolproof plan that it will be utilized in January, February, March, so that there is no unutilized grant in our bank of the NGO. We have not used the word grant, we have only said CSR amount, so there's no word like grant that is used. Now that brings us to a problem in terms of, is CSR spend a commercial receipt or CSR spend is a donation or a grant? And this becomes a very important major debating point for between the corporate and the not for profits. Not for profits, profit for profit do not understand the not for profit language. So for profit, everything is purchase order, contract based, because it's all profit driven. However, we need to explain to the for profit that we can accept money for charitable purpose, and therefore it's good that you set this up anyways as a purchase order or a contract, but our main document should be in the nature of grant. Our request will be for grant. Otherwise, you may get into trouble of TDS and also of GST if you set up commercial contracts, because that is the language that the for-profit understands. You will have to explain to them, well, we cannot take any money for commercial proposition. We can take money for business incidental work, which is incidental to our object. And if that is the activity that you want us to pursue, then that can be considered as, as incidental business, but we will not consider it. We will treat it as grant because we are not getting any benefit. Okay, so that has to be understood. So they may set up under their systems and their software your particular contract anyways, but your main contract should be in the nature of a grant that can be your principal contract. That alone will save you and ensure that you got a grant by way of CSR amounts. This is a very important factor that needs to be understood. Otherwise, if you get into the the commercial consideration for a particular CSR fund and are not careful, then you might also get into the GST and TDS trap. So one has to be very careful. Now, coming back to the ongoing project, so you had this 4 years, as I told you. So every year, the unutilized amount within 30 days has to be deposited in an unutilized CSR account. And once the 4 year period is over, and if there is an unutilized amount still left for that particular project, then within 30 days of close of that particular project, that is by 30th of April, for that ongoing project, which for instance had 4 years, but in the fourth year there was say 20 lakhs that was left, then that 20 lakhs has to be deposited in one of the Schedule 7 funds in within 30 days. So again, the corporate will not need to know what was the final expenditure figure. They will need the audited accounts. Then you will say our auditor is not there and our audit will take 2 months. They are not asking for the audit. Sometimes I am told, sir, our organization audit will take 4 months. They are not asking for the audit of your organization. They are asking for the audit of your CSR project. Okay. So specifically for that CSR project, your account should be complete. Now, the government has said that if there is a failure on part of the corporate to comply with this, then the corporate will face penalty, and the officers who have defaulted will also face penalty, which is mentioned below. Earlier, there was imprisonment provision, but that has been diluted. So there is fee and penalty in terms of monetary penalty, both for the company as well as for the officer who is in default, for not being able to transfer money to unutilized CSR account if it is not utilized. So that is how the mandatory nature of CSR has now come in, which means people, if there is 30,000 crores, that is, the allocation to CSR, 30,000 crores will have to be spent, not 20,000 crores and the rest 10,000, some explanation given. That period is over. So these are some of the provisions that you need. These are some key provisions that you need to know. And your finance, your MIS, your budgeting, your grant proposal has to be made based on an understanding of these provisions. Now you tell me whether this should be known to you also or only to the corporate. It should also be known to you, so that accordingly you will be able to pitch to the corporate. Accordingly, you will be able to make the corporates understand. You have to give education to the corporate in terms of what is your kind of compulsion, what is your status in the income tax law, in what are you benefited by these CSR projects? No, you are not benefited. Is there a consideration? Is it in the normal course of trade and business? No, it is not, because it's not in the nature of charitable work that we do. However, if you are not very careful about the documentation and the way it has to be done, reporting has to be done, then you might get into this, the problem of the department or any authority considering this as a commercial kind consultant contract, which you have to be very careful in terms of understanding. That's what I want to make you understand here. So these are some provisions that you need to understand. Now, what is it that is the definition of CSR? So section 135, schedule 7, which says these are permitted activities, is the definition of CSR. So can you define CSR? The definition of CSR is whatever is permitted in schedule 7 of section 135 are is the definition of CSR. But the rules said there are some exceptions that have to be done. What are those exceptions? The exception is that if any activity is done which is in the normal course of business of that organization, that is not CSR. Now, so if the point number one, anything which is the normal course of business, what does it mean? Suppose a textbook or a notebook manufacturer or a biscuit manufacturer were to give, or give their product, that is not CSR. That will not be considered as a CSR expenditure. If to a political party, again, we know that to any political party, no, it will not be considered. If the CSR money is for the benefit of the employee of the company, okay, as defined in the code on wages, apprentices are not included. So interns and apprentices not included. But if the CSR money is for the welfare of the company's staff, then it is not CSR. Suppose a company were to set up a hospital or a school meant only for the children of the employees and the employees themselves, then that is not CSR. Then what happens is, anything which, this is very important, anything which helps the company to derive marketing benefit. Now, one, as implementing partners or NGOs, we have to be very careful that we are not popularizing or marketing their products and services. We can give credit to them for their support, and their collaterals can be put there. But that project and the information, education, communication that you do through that should not give any marketing benefit to that particular company in terms of its product and services. So one, when you are thanking, acknowledging, giving, putting their collaterals on various materials relating to the project, then please be careful that you are not giving any marketing benefit to the company. The other one is any statutory benefits. So these are two things that I will want to tell you. One, normal course of business, that will not be treated as CSR, and anything that is in the nature of marketing benefit to the company is not considered as CSR. What is also not considered as CSR is corpus donation, any kinds donation that will be given. So in a way, point number A and kinds donation is the same. Then any activities outside India, except for promotion of sports personnel, uh, for sports, only for sports, for training, if it is outside India, then that is permitted. Any activity which is outside India will not be permitted as far as or accepted as CSR. So one has to be very careful. Just as we saw in income tax, if any activity is outside India, okay, then we saw that the benefit of Section 11 will not be admissible unless you get CBDT approval. Here, of course, there's no CBDT approval, but they say that if it is activities outside India, except for training of sports personnel outside India, then it will not be CSR. So we must understand what CSR is and what CSR is not. And now we go to the slide relating to who can implement CSR projects. That is also specified. So a company which is under CSR can implement CSR projects on its own, no problem. It can also collaborate with another company. So the two companies, their sustainability divisions within the company may collaborate and decide this particular part of the project we will do, this particular part you do, and this is the amount of monies that we will come, and that is the modality of implementation. So anyways, for CSR, companies can do themselves. Can companies always do themselves? The answer is no. So what are the other four ways in which implementation can happen, or what we call as implementing partners? The one is that the companies may form their own entities. It could be a Section 8 company, it could be a public trust, or it could be a registered society. As we had seen in Section 1, that these are the three types of entities which can be constituted, registered, incorporated for charitable work. So these companies can float their own such entities. These entities have to have 12A and ATG registration. Okay. And two companies can jointly float a foundation also. Okay. That is also possible. Just as we saw two companies collaborating together, two companies can collaborate and also form an entity. So this entity, why does this entity get formulated? Because the company is not very clear in terms of whether normal NGOs or third party NGOs will be able to complete the work as far as CSR is concerned. And therefore, these entities are competitors for us. And we have to reduce the dependence of the corporates on these entities. So the second and the third are basically entities that are created by the government, either created by executive order or created by act of parliament or by act of legislature. So any entity which is established by law, by parliament or the state assembly, or any section 8 company, registered trust or registered society established by the government. So the government set up autonomous bodies which can be either these three, and they get grants and things like that. So even those are eligible for CSR. And the fourth one is, of course, people like us, NGOs like us who can implement. Now, these are Section 8 companies, public trust, not private, public charitable societies, okay, with 12A and 80G registration, mandatory. So if you have a 12A registration, but you don't have an 80G approval, you cannot get CSR funds. And there is another condition for people like us, and you must have a track record of 3 years of operations. This track record is not required for entities that are created by the corporates. Now, in addition to the fact that these can be implementing partners, there is the CSR1, which you all know. I think when I do due diligence, most of the organizations, except very small organizations, would have filed form CSR1 because that was introduced in 2021, 4-5 years back. 4 years back, more than 4 years, about 4 years back. And what you needed to do is to apply for in form CSR1 for getting a unique registration number as your CSR registration number. And only if you have a CSR registration number, then only you can do CSR activity. So if you go to any corporate, the first thing they're going to ask is, do you have a unique registration number under CSR? It's a one-time registration. Okay, there is no renewal at this stage. However, and it is mandatory for all implementing partners to get this CSR1 registration. Okay, so without this CSR1 registration, the company will not, no company corporate will give you, whether it is under CSR1 CSR obligation or if it is not under CSR obligation. Please remember, there are a large number of companies which may not be covered under CSR 135, but which are still doing voluntary CSR. They can, and actually they are the ones who are doing voluntary CSR are the ones who will use that as a business expenditure and should get ATG. But anyway, there is no distinction here really being made by the court. So I am not going to confuse you there. I am only saying one CSR1 registration is up to now one time, no renewal. Second is that it is mandatory to get for all the implementing partners. Third, after 1/4/2021, if you want to do CSR work and if you don't have that CSR unique registration number, you will not be able to get CSR funding. You have to file form CSR1 through the MCA portal. You have to get your DSC there, and it has to be also certified by a practicing professional, CS, CS, whatever. And he also puts his DSC. And once the form is submitted, you will get from the MCA the unique registration number. I know a lot of people have already got it. A lot of people have not got it. Small ones who can get. A lot of people who do not have ATG approval cannot get it. Okay, so that is something that you need to understand. But if you do not have an ATG, then you are reducing your ability to get CSR funds and otherwise also getting funds, because no donor will want to give you money if they are not able to get the ATG benefit. What are the other provisions relating to CSR? So the government has permitted international organizations to help corporates for designing, monitoring, and evaluating the CSR project, which means government wants that the money that gets spent through CSR should be spent with quality. And therefore, international organizations are being permitted to help corporates to design, not implement. These international organizations cannot implement. Implementation can be done only by the four categories that we have just seen. But they can help in monitoring evaluation, in terms of designing, in terms of impact assessment. They can support the corporates for better efficacy or effectiveness of the project or the CSR funds. That is the intention of the government, not just to spend the money, but to spend the money effectively. The next provision is that the corporates are now permitted from the CSR obligation, that 2% CSR obligation. Say if the CSR obligation 2% is 100 lakhs, 1 crore, then 5% of that 1 crore can be earmarked for administrative overhead for that corporate's social sustainability division. That money will not come from the grant to the implementing partner, but will be taken from the overall kitty of 100 lakhs of 1 crore. So up to 5% can be retained by the company for administrative overhead. This administrative overhead does not include, implementation, monitoring, evaluation, impact assessment. Those funds are separate. Implementation funds will go to the grant partner. So now no corporate can say, well, when we will come for visiting your project, this much money you will have to allocate from your grant. No, because now the corporate has a 5% administrative overhead available for that, for their, out of the total, the obligation of 2%, as I said, which can be utilized for administrative overhead. Please remember this. Then coming to the CSR committee. So we had seen the first slide where we saw that if you are falling under one of the three triggers, you will have to constitute a CSR committee. Now, if the CSR spend is more than 50 lakhs, then CSR committee is mandatory. If it is less than 50 lakhs, then you may not constitute the CSR committee for that year. But if it crosses 50 lakhs, then you will have to. So now the law is that if the CSR spend is more than 50 lakhs, then it is mandatory. Otherwise, the board can manage it. However, if there is unutilized CSR fund available at the end of the year, then the CSR committee is again mandatory. It has been now changed subsequently. So if there is an unutilized CSR amount, and the next year the obligation for CSR is 40 lakhs, then also the CSR committee has to continue. The CSR committee's role and responsibility has been increased tremendously. Now what the CSR committee has to do is to make an annual action plan. Now, please remember, these days the annual action plan is also available on the website of these corporates. What does the annual action plan say? So it is so transparent now and increasingly becoming transparent. The annual action plan says what are the projects that we will spend our 2% CSR in the coming year? Which are the areas, which are the projects out of our CSR policy that we will fund? The manner in which it will be implemented. So will it be implemented by us, by our foundations, by third party NGOs? Okay. So you can see exactly what is the relationship between the CSR policy, where they have said how will we implement. If they say we will implement through implementing partners, then you can see in the annual action plan which are the implementing partners they have selected for implementing, what is the project, and how much is the amount of allocation of money. So what else do you want? The modalities of utilization, how will it be utilized? Okay. What will be the monitoring and reporting mechanism? What will be the impact assessment at the end of the project period mechanism? All that is stated in the annual action plan. And these days, the annual action plan of big corporates is available on the website. Besides the annual action plan, the under the 2021 change that happened, the CSR committee has to prepare an annual CSR report, which is attached to the board of directors report. So you can always see the board of directors or the annual report. So just like the annual financial statement, you have the annual report of a corporate, which is also available on the website. And in the annual report, you can see the CSR report in an act, which follows in Annexure 2. Now, this is a fairly detailed report. Again, you will be wondering, you should think, when we are making annual action plan, where will the data come from? The data will come from you. So increasingly, the information that is required by corporates is increasing, and all the time information is being asked. So sometimes you will feel, pehle to they were not asking these things. Now why are they asking? Because the scope of coverage of various things which have to be reported and for which reports have to be prepared has increased tremendously. And where will they get this information from? They will get it only from you, because you are the implementing partner on ground doing all this. How you are implementing. So what is the outcome, what is the output, what is the MIS? They don't have MIS, they don't have analysis, they will all depend on you for their CSR annual report. So what is the amount of unspent money, what is the impact assessment done, how much was the administrative overhead and how much did they spend, did they create capital assets, what are the location of the CSR projects, what CSR projects were done, what were the outputs and outcome of those projects. All this data finally has to come from you, because those hard numbers will come from you, which they will then analyze, they will then communicate, they will then present in a better fashion. But the basic data, the hard data or the information will from the ground will only come through you. So you will realize that more and more information is being asked by corporates, because they have to report more and more. So you can't go back to them and say, why are you asking this question? 2 years back, you were not asking this question. Why? Because now the reporting requirement for these corporates is increasing. Now, please remember that if any corporate is implementing a project and generating business income out of that project, then they cannot retain that as business income, which means the business income has to be used for CSR activities by way of a project, standalone or ongoing, whatever way. But that money cannot be considered as business income. Prior to 2021, suppose there was a school that was constructed through CSR, and if the school was generating fee, so whatever was the surplus of that school, because the asset belonged to the corporate, because it was created as part of CSR and it is generating business income, that business income was added to the total income of that corporate. However, in 2021, the government said you cannot earn income on your CSR obligation, and therefore said if there is any surplus income, that income needs to be utilized for purposes of CSR work and cannot be retained by the company. Whether you do an ongoing project, whether you do a standalone project, but it has to pursue some CSR activities. Similar to business income came the question of assets. So the corporates created assets using CSR money and kept the asset as part of their assets in their balance sheet. So just like business income, the government said, how can you treat these capital assets as your assets? Because this was against an obligation. How can they be your assets? In 2021, similarly, the assets created out of CSR fund utilization by a corporate, remember, by a corporate, will have to be transferred to one of the implementing partners. They cannot retain it as part of their assets. So it can be transferred to whom? A public authority, implementing partner under Rule 4, which can be, their own foundation. It can be you also. Okay. The third one is beneficiaries, direct beneficiaries, which could be SHGs or, voluntary groups or collectives. So you can see that after this, if a corporate is implementing a capital project, then the capital project cannot be retained. It has to be transferred. So suppose you are situated in a particular place where a corporate is operating, local area preference, they said we will create a school or a hospital or whatever. Now they cannot retain that. They have to transfer it to one of these three entities. So you must look out for opportunity to take that asset and it will become your property from them and it will have to be transferred by the corporate to you. And you can make an ongoing project for that and get funding and use that asset for creating a particular ongoing project. However, if you do not know that there is some such provision, you will never be able to do that. So in 2021, most corporates who had assets created out of CSR funds had to transfer these assets to one of the implementing partners, to a public authority, or to beneficiaries at large. And the amount of money that is used for transfer in terms of stamp duty and other things is something that will be taken from the CSR obligated 2%. So this does not apply to grants that have been given to you or CSR funds that have been given. So if you have been given CSR fund, say 1 crore of CSR fund, and you have to create capital asset of 10 lakhs, that is your capital asset. That is not what we are discussing here. What we are discussing here is that if the corporate were to use the CSR money for creating an asset, they cannot retain that asset because that is towards a liability or an obligation, and it cannot be their asset. The surplus from the asset cannot be their business income. It has to be used for CSR. That's what we need to understand. It also gives you an indication that if corporates are creating assets, sooner or later they will have to transfer that now under the new rules. And that is very important understanding for you to be able to see around your area. If corporates are creating some capital asset, can you take those capital assets? Can you be one of the implementing partners, Section 8 trust or society, and stake your claim to that asset, and also create an ongoing project where you can run that capital asset. It will be a very long term kind of sustainable activity for you. That's the reason why you should need to know this provision. Now coming on to following up on uh, two more things. One is, as I said, lot of information about CSR is now available. At least the bigger companies are providing lots and lots of information on their sustainability tab. So mandatory disclosure, there are three right now. One is the CSR committee, the second is CSR policy, and the third is the annual action plan or the projects approved by the board. These have to be put on public domain. Please remember, the annual action plan is a very good document that you should read to understand whether this corporate is your corporate. Will this corporate give money to you? And that those details you should put slowly and approach those corporates. That's the right strategy for fundraising. The second thing is that the utilization certificate for CSR spending is now going to be certified by the CFO of that company and not by the CSR committee. What is the message here? The message is that the financial information that we will provide to the corporate has to be accurate and in the right shape. Otherwise, the CFO will not sign the UC. And CFOs understand the language of accounts, business. So they will quickly find out whether these numbers are saying the truth or not. Therefore, our financial systems and our software, our reports, our timely inputting of the expenditure should be such that the financial report and UC that you are providing, audited or unaudited, is correct, so that the UC is finally signed by the CFO for that corporate. Otherwise, the corporate CFO will not sign the CUC, and the your CSR division people will be after your life to correct that UC. Very important. And we will see that there is a UC template that has been, mandated as an advisory by the ICAI. Very good template it is. You should try to follow that template for all CSR projects year after year. It is a very standard, simple template, and no corporate will say not do not follow this unless they have their own template. So very important to understand that financial information should be accurate. Otherwise, the CFO is not going to sign. The government has been careful in making the CFO sign off on the utilization of CSR fund and not the CSR committee. Now, in certain situations, some companies may actually be spending more money than what is their 2%. So suppose the 2% was 100 lakhs, and this is COVID year, and 100 lakhs against that they have spent 150 lakhs. So will they get credit for that 50 lakhs? The answer is yes. They can carry forward that excess spend of 50 lakhs against the liability of CSR 2% in the next 3 subsequent financial year. So suppose the next year, based on 2% rule, their liability was 80 lakhs. Then if they spend 30 lakhs only and adjust 50 lakhs against that 80 lakhs, that will mean that they have complied with the 2% regulation or norm. So that has to be something that you should know. You should not just calculate and say, well, this is 80 lakhs. Why did you not spend 80 lakhs? It's likely that the corporate might have spent more in the previous year, and you will get that information from the annual CSR report, which is attached with the annual report. So you have to be careful to see that there is a provision for carry forward of excess CSR spend in a particular year that can be carried forward for 3 consecutive subsequent years. Okay, but not more than 3 years. If there was loss and there was nothing to spend, suppose in the next 3 years all lost, and there was a 50 lakhs excess spend in this year, will that be carried forward to the fourth year? Answer is no. Now, this is one slide that is very important to understand for finance people also. The government has introduced what is called as impact assessment for CSR projects. So no project that has been given under CSR will be generally without impact assessment, but not all projects are covered. What is the rule here for impact assessment as of now? Every corporate which has CSR obligation of 10 crores or more in the last 3 financial years. So last 3 financial years, 22-23, 23-24, and 24-25, your obligation was 10 crores. Your obligation, CSR obligation was 10 crores or more in each of these 3 immediately preceding financial years. Then you will have to get impact assessment done for your projects. The value of each project being more than 1 crore. Every project where the project outlay is more than 1 crore, that will have to be mandatorily got assessed under impact assessment through an independent agency. So if your project was, if the corporate had 10 crores obligation and your project was say 3 crores, and the project has ended on 31st March 2025, will your project be under impact assessment? The answer is yes. Now, the second question is, when will this impact assessment happen? And the government is very careful there also. So the government said that the impact assessment for a project, suppose that has got completed on 31st March 2025, will be after a window period of 1 year. That is after 31st March 2026 and not before that. Why is that the case? Because the government wants to find out whether that activity was sustainable or not. So they have given a window period of 1 year, and after 1 year, the impact assessment will be done. So when we implement CSR projects, we must see that that particular project is sustainable in the community, because the impact assessor will go after 365 days, by which time the community would have forgotten you and your project. and they will come back and say, well, there was no, we could not get any proof of any sustainability or activity under the project, and you will get blacklisted. So that is one thing that has to be understood. There is to be a cooling period of 1 year before which the impact assessment has to be done. What is the budget for impact assessment? So just like administrative overhead, we saw 5%. Here, this is also from, from the 2%, but a separate amount for impact assessment, 2% or 50 lakhs, whichever is higher. So the maximum amount of impact assessment amount or cost that can be earmarked is 50 lakhs. Okay, 2% or 50 lakhs, whichever is higher. This is, there is a change. So this is the provision now, and this cost will be part of the 2% separately. So you had 5%, and you can also have another 2% with a maximum of 50 lakhs. So 5 and 2, 7% gone. 93% is something that can be done for implementation. There can be also some amount of money. So these 5 and 2% can be earmarked clearly as per law. Then there could be implementation, there could be designing, there could be other things that could be done. So these are some of the provisions related to the CSR law that I just wanted to come to. Now, this is the advisory for the ICAI. I have given the link below. Many of you might be knowing about this advisory. This was actually issued way back in 2020, 5 years back. And a lot of corporates are insisting that this particular template should be done. So the practitioners, the independent practitioners report format, as well as the template of the UC is given there by the ICAI. Very standard and very good. And if you follow it year on year, then I don't think there will be a chance of mistake. And there will be common understanding between you and the corporate for the UC year after year. Otherwise, if you keep changing the UC format, that will have a problem. So I would request that please go to the advisory, see the template, both of the auditor's report as well as of the UC. And so it will be comfortable for the auditor, it will be comfortable for the corporate, and it will be comfortable for you. So please do that if you still don't do that. So now come, so these are the provisions of CSR, and I come to one aspect related to, CSR, sustainability, and ESG. We keep hearing these words. What is the relationship between sustainability at the top level? That sustainability is like an umbrella, and under that you have CSR, and under that you have ESG. So what is it? How do they all look like is what I'm saying. But we have seen CSR because we look at CSR funding, and all the provisions relating to CSR funding is something that I have given to you. But when you do CSR work or you are implementing CSR projects, please remember that the CSR activity is not only for compliance of Section 135 and CSR. It has a much broader ramification in terms of sustainable business practice. Now, what is sustainability? Is defined in the National Guidelines for Responsible Business Conduct, which says how does a company balance the social, economic, and environmental aspects of business. So every business has social aspect, every business has economic because they have to generate profit, and every business has environmental aspect because their activity affects the environment in which we live. So how does this balance get struck? Is what is sustainability. How do you do your business goals of profit, but you also pursue those business goals of profit without affecting the social fabric, without affecting the environment, is what is sustainability. So how do you do justice to all the three aspects of any corporate that is doing work? Every corporate is not doing just economic value, they are also doing social impact. They are impacting socially, so they have to be mindful of what that social impact is. It should not be adverse. They are impacting the environment, they are impacting governance. They are impacting various other stakeholders. So what sustainability means is that how do we balance it out but still remain focused on our business goals, because we are into business at the end of the day. Now sustainability is basically like an umbrella, and under that umbrella you have CSR and ESG. Now CSR is actually some kind of a subset of ESG in a certain sense, because CSR is social responsibility, and in ESG, E stands for environment, S stands for social, and G stands for governance. Now S in the ESG is basically the CSR, and the environment and the governance are additional aspects of the ESG metrics. So the ESG concept is much broader than CSR, but the ESG also starts with CSR. Now, ESG is also something which is mandatory for listed companies, for some of the companies in this country under through SEBI. Okay, so it's not that they just have to do. What I'm trying to say is that your CSR work is not just CSR, it is going to ESG, and from ESG, it is affecting the sustainability concept overall of business and of all businesses for the country as a whole. That is the kind of relationship that has to be understood. Okay, so as I've mentioned, CSR is the starting point of ESG. Now, CSR activities fit into ESG because the sustainability, the S part of ESG is the CSR activity. Now, I have mentioned the word BRSR. I will share what it means. So please understand that your work on ground is actually finally affecting the sustainability of business, of all businesses put together, of the country as put together, of humanity put together. That is the broader impact of your work that you do, but through CSR. Now, CSR is part of ESG in terms of social. There are environmental areas and governance areas that have to be also looked after by corporates, which may not be directly related to your CSR work. So we will have to move there to understand. But before that, let's understand what are the compliances of corporates on sustainability. So we had seen the annual action plan. Did you see that? Yes, we saw when we were doing CSR committee, they have to make a CSR annual action plan. That's their reporting. Second is their annual CSR report in Annexure 2. And the third is the CSR 2 report, which is e-report that they have to file on the MCA portal, which gives actually most of the details in the annual CSR report. And you can go to the CSR 2 form and see those details also on the MCA portal. But besides, so the top three ones are basically CSR compliances under Section 135. But going beyond CSR, going beyond social, and going to ESG, there are more reporting requirements of corporates where the S portion is from CSR. So right now, the reporting by corporates is through what is called as business responsibility and sustainability report. That's what is called the BRSR framework. Before that, there was the BRR, which has been discontinued. We will see the journey very quickly. And now an additional factor beyond BRSR is what is called as BRSR core, which is actually a subset of BRSR, which is more precise and more, fine-tuned, more based on assurance or validation by practitioners. But for us at this point of time, BRSR should be more interesting. So BRSR brings in CSR through our CSR work, but the business responsibility and sustainability report also brings environment and governance into the BRSR framework. So it is much wider than just the CSR, but CSR is positioned in BRSR through the S portion of ESG. Now, BRSR has to be filed by corporates. The CSR 2 is something that I have already said. It was introduced in 2022. So what do you have in the eCSR? basically all the information that you have in your CSR annual report. Kya kiya? It includes details of, uh, triggers. Are you now covered under 135? What was your spend on various projects, on ongoing and other than ongoing projects? Okay. What was your unspent amount? Did you put the unspent amount? Was there any set of availed? What are the assets created? Have you transferred those assets? What was the impact assessment? All that. This has to be filed within 30 days from the AGM, as an addendum to AOC 4, which is the report that has to be filed after 30 days of AGM. Basically, the financial statements that have to be filed by the corporate. So what I'm saying is that the CSR2 report is also coming from the information that you are providing into the CSR committee in their CSR annual report. So most information relating to corporate social responsibility or the social aspect of ESG will come from you. Now, the journey of ESG or BRSR in India. So we keep talking of ESG, but we need to understand how CSR and how ESG, that is the kind of relationship that I'm trying to explain to you. You don't have to be an expert, but you must understand how the work that we do is affecting the larger picture or larger canvas. The history I'm trying to say, it's very, very recent. It is very new concept and it is evolving. So the MCA came up with the National Voluntary Guidelines, NVGs as they are called. And based on this, we had the BRR framework, the Business Responsibility Report Framework in 2012, which was for 100 companies and then for 500 companies. However, 2017, the BRR came with an integrated BRR where they said not just the impact that you are creating, but also link it to the financial numbers. The biggest change that happened in ESG was in 2018 when the National Guidelines for Responsible Business Conduct, it's called the NGRBC. It's a superior version of the NVGs, was formulated by the Ministry of Corporate Affairs. Now, currently, the NGRBC is the document which tells corporates how they have to fulfill their ESG agenda. Okay, you get it? And then the business responsibility report or the BRR report was refined to in 2021 and is now called the BRSR or the Business Responsibility and Sustainability Report. Now, this report is required to be filed by 1,000 companies by market capitalization from 2022-23. 2022-23, these 1,000 companies have to file it. 2018 was the NGRBC. आपको ये broader picture इसलिए समझना होगा in summary form. I'm not getting into details, but I'm trying to tell you how does your work affect these companies. So the ESG is a mandatory requirement for listed companies. 1,000 listed companies by market capitalization from 22-23, very recent. In 22-23, 1,000 companies which are the largest by market capitalization, they were supposed to file the BRSR, the Business Sustainability Responsibility and Sustainability Report. Now, this Business Responsibility and Sustainability Report includes the CSR report in a certain part and many more reports, because the BRSR framework is something like this. It has 9 pillars on which the report under BRSR has to be provided. Now, I have put the 9 pillars here. Ethical business conduct. This is basically the G part or the governance part of ESG. Product responsible product responsibility, the goods and services that are done, that is also governance. Employee welfare, again governance. Stakeholder engagement, governance. Human rights, governance. Environment, E part of the ESG. Public policy engagement, again governance. Consumers, society, the S part. Inclusive growth, the S part. So all these 9 pillars in NGRBC affect the various parts of ESG, E or S or G, based on these 9 pillars. And on the 9 pillars, you have to report in your BRSR report every year for 1,000 companies by market capitalization from 22-23, and they are going to increase. Now, this BRSR is actually part of the SEBI. So the BRSR report is the SEBI's listing obligation requirement. Okay. And the NGRBC principles will have, each of these principles will have subparts. So you are seeing the 9 principles here, like you will have product responsibility. So in product responsibility, what are the core elements of those product responsibility? They are all defined. And on those core elements, what is your report card has to be filled. Okay. So the BRSR format is general information, management and policy disclosures. What is the management and what are the various policies that we follow? The C part is actually the critical part, which says on each of these 9 principles, what is your report card, okay, of your performance. So every pillar wise, you have to give performance in 2 ways. One is essential, which is mandatory disclosure. And the second one is leadership indicators, which is voluntary disclosures that you may voluntarily disclose. And a lot of companies, big companies, are disclosing. Okay. But besides 1,000 companies by market capitalizations, others can also voluntarily disclose? Yes, the answer is yes. Voluntary disclosure under BRSR is always possible. So this is broadly the relationship in terms of the overall aspect of sustainability of CSR and ESG, and the ESG being driven by the BRSR framework. Now I come to the last slide, which is basically resources for new business. So when you are doing CSR, what is it that you might want to look at as resources? And I mentioned here a couple of them which are very important. So first of all, of course, the company's websites. Okay. Big companies, you can even see their BRSR report, very detailed report, and they have captured where how they have performed on each of these principles and on the core elements of each of these principles, both in terms of mandatory and voluntary disclosures. और आप देखेंगे कि कुछ कुछ एरियाज के अंदर the work that you are giving is feeding into the BRSR report. So you have to see the bigger picture of the impact that your work under CSR is creating on sustainability for the country as a whole. That's how you have to look at it. Next is the National CSR portal. It's the portal created by the MCA. It's called csr.gov.in. You have so much information. Unfortunately, the information is only up to 22-23. Every company, what amount it is spending, where it is spending, block wise, district wise, state wise, how much on which theme it is spending, everything is available. Also, the MCA has come up with what is called as the CSR exchange.gov.in, which is to provide you with a platform for both corporates as well as implementing partners to interact. The MCA website, of course, as it is, the FAQ for MCA, which was August 2021, very important document. And you can, I will not read it out, but for funding and proposal writing, these are some of the sites. I mean, they may be somewhat old also. I'm not saying that. This is not part of our agenda. The part of our agenda is why are the resources available to understand about corporate social responsibility, is these 4 or 5 resources, the websites, the 2 portals of CSR of MCA, the MCA website itself, and FAQs of by the MCA, which is available on in public. Subsequent to the changes that were made in 2021, January 2021, I think it was 21st or 22nd January 2021, where this entire focus on CSR has again been brought back by government. So that is all that I have. I'm stopping my presentation. So over to questions. I'm looking at what we have as questions. I think this is Ramakrishna has one question. From the CSR donations received from each company, can NGOs earmark and show corporates 5% of the amount towards salary and other administrative, provided, yes, you can, provided it is part of your project budget. This, please remember, this 5% that I told you is the 5% administrative overhead of the company's sustainability division. It is not part of the implementing partner's budget. So when the implementing partner's budget is prepared, you may have 5% towards overhead. Okay. Now, a lot of companies in their CSR policy are also specifying that the overhead will not be more than 3% or 5% or 8% of the total project cost of that implementing partner. So you'll have to be careful there to see in the CSR policy, is there a ceiling prescribed, or at sometimes the ceiling may not be there in the CSR policy, but they may have a grant management policy. And in that policy, they might actually say that we will not give overhead to the implementing partner more than 5% or 3% or 8%. So various foundations that might be giving implementing partners monies may have their own regulations. Several corporates that might be giving directly may have that condition in their CSR policy. Uh, no, so Bhakti, I have no answer to this question of what is the maximum percentage. Sometimes people allow even 10%, sometimes 3%. I know of some CSR corporates not allowing anything. Actually, they are giving it on reimbursement basis. They are that strict. So they are not even allowing overheads. For instance, no, there is no law. There is no law on administrative overhead or overhead. There is no law on overhead, not only in CSR, but anywhere. So if you get international funding, if you get grant funding from domestic grant making organizations, they all have their own grant management manual where they may specify or not specify. Some of the grant making organizations specify we will not give any overheads. It's possible. So you will have to see on case to case basis. There is no law. Okay. Then I'm seeing Anil asking a question. An NGO needs to issue GST based invoice against such CSR fund to CSR corporate. You see, the point is that I will clearly, and that is what I was talking when I was teaching you one of these slides. Please ensure, and the corporates will always come to you saying that this is a consultant client relationship. My understanding is that this is not a consultant client relationship. This is essentially a grant. So they might say, we will do a contract, we will do a purchase order and this and that because our system wants that purchase order. My suggestion is let them do that purchase order. We should not get into GST and CSR because otherwise that will be a commercial, an activity and can jeopardize your charitable work. So you will have to continuously explain to the corporate that we will neither charge GST nor are we within the purview of GST because we are exempt as a charitable entity from charging GST. Second, if you are saying that we are getting a grant, therefore you are not getting any benefit, you are delivering services without any benefit, therefore it is not a commercial consideration. It's not a consideration actually. And you will also not be within the purview of TDS. So again, when there is TDS, there is also a consideration that this is for a service because we have seen TDS is for a service generally, for providing service. Is a grant a service? Is the CSR project a service? Answer is no. So you have to continuously explain to the corporate. You may have your internal mechanism. We are fine with that. But for us, this money is a grant. We will recognize it as grant. We will report it in 10BD as specific grant. Uh, and we will raise not an invoice, but a grant request letter to you without GST. You will not charge a TDS because this is not within the purview of the TDS family. Will so this is all I can say. I cannot continue this conversation on grant versus consultant contract in CSR. It is a very major issue. So it's a matter of, education. Will the FCRA rules of FEMA Act apply to these CSR foreign companies? Yes, they will. Yes. So, so please remember, foreign companies means any company which is incorporated by, which is incorporated in India as a foreign company because it has foreign shareholding. That so every company which is incorporated in the Companies Act, whether Indian or foreign, is covered under CSR. Okay. Now your question is FCRA rules or FEMA rules? They are separate. So I have answered the question about CSR. Now comes the question of FCRA or FEMA. Now, if you are registered under FCRA and you are getting money from outside, you are under FCRA, and we'll see that in the next session in great detail. If you are a for-profit entity, then you can get money through the FEMA route. Okay, as long as the consideration is more commercial. If the consideration is charitable, then again the FEMA route is a dangerous route. So that's the answer. If it is a company incorporated in India and held as a subsidiary by a foreign company, it is also within the purview of CSR. Generally, how much fundings can a, no, I can't answer that question. So that's beyond my course. Okay. The point is, if you were to ask me as a general question, I can say that corporates have a thumb rule. Okay, that's again not written. They say they, and that is based on the principle of risk. How much risk can we take with our money with this organization? And that's not just with corporates, it's more with corporates because the corporates understand the language of profit and risk. Risk is made to for profit entities. Risk is the first concept that is explained to them. In not for profits, risk is not even taught anywhere, and that is the biggest blunder. Anyway, so the question is, what is it that is a thumb rule? Our understanding is that corporates will look at what your last 3 years income and expenditure statements look like. So if the last 3 years expenditure statements were somewhere in the range of 1 CR, 1 crore, then the maximum exposure that they would normally take is not more than 25 to 30%. Okay. They will also say what is your 3 years future pipeline, meaning what is your visibility for the next 3 years. You might say 1.5 crores, 2 crores, and 3 crores, or whatever. They may make an average 3 and 2 and 1.5, 6.5 crores. 6.5 divided by 3 is whatever, 2.5 crores. And then they might say, well, we can go and have an exposure of 20% or 25%, which makes it about 40-50 lakhs. With the previous historical data, it might be 30 lakhs. So they will get a ballpark range in terms of 30 to 50 lakhs of money that they can give you for this project. So this is my understanding. It can vary. This is not a rule. This is not written anywhere. This is how they work, is the business nuance that I know. All right. Any more questions? The key takeaway from this particular session clearly is for you to understand the provisions of CSR, और उन CSR की प्रोविजन को कंप्लाई करने के लिए, कॉर्पोरेट को कंप्लाई करने के लिए, you have a huge role to play. And unless you know the law or the provision, you will not play your role properly. The corporate will get frustrated with you and go to another implementing partner, or will start implementing the CSR project, CSR money through projects by themselves. We have to not allow them to go in that direction. If any NGO has utilized 100% amount but not received 100% CSR funds from CSR corporate, then how it is shown in books of accounts as a receivable, okay, as a grant receivable on the asset side of your balance sheet. Simple. It has nothing to do with CSR. Any funds, any other grants that you got, Government grants, you spend more money, you didn't get it, you'll show it as a grant receivable from the donor. Okay, on the and show it as an expenditure, of course, because you spent the money, but the money hasn't come. So that particular thing is a grant receivable. Just as unutilized grant is shown as a liability, grant receivable is shown as an asset. NPO has spent fund through accrual based accounting, and there are some liabilities, and there is any legal compliance on. So it's actual spend. Okay. I have said that actual spend for purposes of CSR is utilization. Actual spend for purposes of CSR is utilization. So you have your answer. If there is an accrual not spent, I think that is not considered as spent because the FAQs clearly say utilization spend means utilization. So the money has actually gone out. All right. Any more questions? Unmute also and ask quickly. Another 5 minutes now. This
Yeah,
presentation,
I
please
have a
have a look
question.
at. Yeah, Ramakrishna, go ahead.
Yeah. See, there is a confusion, at least in my mind, not many, but the corporates, if they give to NGO before 31st of March, the funds, that is not sufficient because now the rule has come that if it is not been spent within 30 days, that they are supposed to transfer to another fund account, isn't it?
Correct.
So which means that if they even if they have given to the NGO, they can call back the funds and then put it in a separate account.
That is why I said, Ramakrishna, that corporates are reluctant to give money during January to March,
January to March. Yeah, you said that.
precisely unless they know the money has been spent and they have a great plan for January to March.
Okay, okay.
If CSR corporate TDS on CSR, so if the corporates are deducting TDS on CSR fund and reported in PAN NGO, then what to do? Of course, there's no other way. You can claim the refund for that TDS whenever you can get that refund. However, that particular TDS implication will have implication also in terms of GST. So it can be construed as a commercial receipt, as a fee for service, because it will be considered as fee for service. If it were not fee for service, it will not be considered under TDS. It will be either 194C or J that they will deduct the money. So there is a contract. Contract means that you are deriving some benefit, which is not the case with the money, which is not the case with under GST, but you still are getting dragged there. And therefore, please don't go in that direction, is what I will say. However, if TDS has been deducted, you can always claim it as a refund at the time of ITR 7. Means if CSR corporate deducts TDS. हाँ ठीक है समझ गया समझ गया. So the big thing, the big takeaway for today is also that you should not sign an invoice for grant. Towards a grant, you should not sign an invoice. You say you do whatever you want to. I am going to give you a grant request letter, and this is a grant for me, and there should be no TDS deducted on this grant. I will show it as a grant. I will show it in my 10BD. I will show it in my books. I will show it because this is not against any service, that this is not fee for service. There is no consideration. There's no benefit that is the NGO deriving any benefit. The benefit is being derived by the community. All right, I am closing the session now. Thank you for your attention. I am grateful people have joined. I will urge you to have a look at this presentation. It will give you a full picture and very relevant for yourself. Okay, although this is for corporates, but the presentation is very relevant for your work. See you next Friday, which is the 16th of May. I will send you a reminder and we'll meet at 3 o'clock. Thank you very much.